Hey everyone, Sam here. Hope everyone is doing well. Let's get started. First important question, is anyone here new to these sessions or new to the, supply-demand strategy? Anybody brand new to all this? Okay. And you should be able to hear okay and see the screen, correct? Okay, great. All right, well, good to be with you. So we are going to spend our time together. Since no one is brand new, there are plenty of recordings on core strategy, more of the lesson version. And I'll certainly cover some of that today, but I want to make sure we get through, plenty of markets and really apply everything we're talking about here. So just to kind of kick things off, we do employ the same strategy in all of our sessions, which is quantifying the market's real supply and demand, focusing on where banks, financial institutions, significant market participants are buying and selling so that we can buy and sell there too, right? The goal is always two things: figure out where prices are going to turn and where they're going to go with a very high degree of accuracy. If you're struggling in any of this or not achieving your trading goals or what have you, it all comes down to one reason. It's because you're not focused on what's most important. So I'm sure most of you are focused on supply and demand, but what else are you focused on? In other words, if you're focused on anything but where are the buy orders and where are the sell orders, it's going to complicate something that's really quite simple. Does that make sense? So let's get started here. Let's apply everything we've learned and go over some markets. And yes, I have a big list of markets over here to my right that I normally go through, but I'm happy to go through any markets that you want to look at as well. Okay. And just want to check one more thing here. Just want to look at a little level here in the S&P. 1 second. Okay. Yeah, we can start with your markets. So any markets you want to look at, just type them into the chat. And then, like I said, I have a pretty big list over here. So we can start with the dollar yen. So the yen, and this is one of my sessions a couple weeks ago, is still moving off of this larger time frame supply. I don't know if it was an FX Street session. It might have been, but we had this in the XLTs too. Base, drop, rally up to the base for an entry. What was most attractive about this trading opportunity was the very large profit zone below. Okay, we expect price to go from the 112 area all the way down to below 108, at least to get things started. Okay, you'll probably get a bounce up in here, but nice trade to get started. I don't know if anybody's in this, but yep, we'll go to the NASDAQ next. If you're not in that, where's the next opportunity in the yen? So let's look. Now I just have to move the chat box. There we go. So if you're not in this and knowing that there's further downside room, we start with current price and look up the price ladder until we find a quality supply zone. For that, There is a level that starts here. Not the most ideal level. It's a drop-based drop in the middle of a move. Um, but we'll take it. You know, your probably price is likely to slow down there. Up in here it gets a little more interesting. Okay, and what we'll normally do is try to combine both levels. Now this looks like it's going to be much too big of a stop for a lot of people, but that's okay. We want to, you know, if it is, then you just don't take the trade or don't combine them. Okay. So obviously the upper level has a little bit higher odds. Yeah, we'll do the demand side next. Obviously the upper level has a little bit higher odds than the lower level. And that's to be expected, and that's what the chart is suggesting as well. So that would be for a shorting opportunity, or as we look for demand now, targets for a buy possibly lower. So let's take a look. To find demand, I want to make sure that I have enough days in the chart here. So let's get more than that. I'm going to put a horizontal line across the lowest price that is visible on the chart here. Not that there's demand here, I just need a reference point. What I'm looking for is something at or below this line. And let's do that. Real quick though, I just want to see something on... Yeah, if you're day trading the yen, and this is why I was looking at this. If you're just day trading then, you do have some demand zones below current price right here. If you're talking for a short-term day trade kind of thing, we would just take all this with a stop below the low. Right in here. Okay. All this is really, one or two areas. Okay. Drop, base, rally. This is all really considered one base. You see how this base rally, see this? That takes price up to here and fills these orders. See how price pulls back into this and is working out fine? Okay, so think of pure supply and demand. If there's buyers here, there's more likely to be buyers just below that. Okay. If people are willing to buy something at a certain price, and you have proof of that, then they're more likely to buy when you drop the price even a little bit more. Okay. So we have some evidence of that here. Okay. Now let's go back to our other chart, because if the day trading is not the idea, we want to look for the bigger zone to buy against. Then let's do that. Let me get rid of this, that, and let's keep scrolling here. So we're looking just below 109. There it is again. No, don't worry about that retracement. That's really all still part of that zone. Okay, so here's where we hit that line again. And now we see below, we have like 3 demand zones on top of each other. Drop, base, rally, which we want, coming out of that area. Let's get rid of this now, and let's put in our... Now we can combine a couple areas. And we'll take it at the low. I'm down to a 30-minute chart. That's why this might look a little messy to you, but it's fine. And if I combine all 2 or 3 areas, it's really all this right here. Okay? There's that. Okay, so you can find that on your, your 30, 60-minute chart. Let me just go to a 60. That's what this chart in the lower left corner, that's what it usually is. So there it is. Drop, base, rally with a base coming out of it. Very ideal. Also notice how price attempted to come back to the level but couldn't. That again is a big sign that there's probably some orders there. And remember, there's supply-demand imbalances all over the place. What we're looking for is, where are those significant supply and demand imbalances? where our bank's buying and selling. Okay, so there's the yen, both in the larger time frame and smaller time frame. Okay. Yep, we can go over to the NASDAQ. So the supply side is pretty easy here. Let's go to the demand side. And let's quickly blow up this chart. So for this time frame, no, not that one. That would not qualify. Let's go down to the 60, and let's put again a horizontal line here, and let's see what's over to the left. That's okay. So we're into some demand right here. That's why price is kind of stalling out here. The challenge here, though, so you're likely to get a rally out of this area, but this is one of those examples where, and we've seen this so many times, where even though you're likely to get a rally and you're likely to be right that price is going to bounce from here, there's not much room for it to go up. Because just, right up here is more supply. Now, I know that's like, what, 40 points? But, you have to make sure that the risk-reward is ideal. For me, I'm always looking for things that are hopefully much more than 3 to 1. Okay? So let's look a little bit lower. Let's go. Again, we can go here. Yeah, so that's this level right in here, which is okay. But again, if you're really looking from here up to here, I'm sorry, there's your little levels in here. So there's another level a little bit lower that puts you, adds about another 20, 25 points to your profit zone. Here's the ideal level that we're looking for. Let me show you. Does everybody see down here? Drop, base, rally. Here's the pullback for entry, and price takes off. Does everybody see that one? The reason why we focus on that is because that drop base rally is always going to be farther out on the curve. Just like rally base drop, when it's fresh, very little to the left, here's your entry for that. So that's really what we want to look for. Now, in a smaller time frame, we'll find some of that in here. We're just on a pretty big time frame right now. Okay. So in the early going, we would expect the equity index markets to rally a little bit up to that supply and then come back down. Does that make sense? The other market to take a look at is, well, let me go to the Aussie dollar real quick. I just want to check something there. I had a position on there for a while. Take a look at the dollar. Don't forget, we've been on our way from 103.40 down to the 92. Got close to the 92, about 92.50, and this market has started to rally a little bit. We've come up to some supply up here. But we're looking at a daily chart. Yeah, we'll look at gold next. But let's go down to a little bit smaller time frame in the dollar, just to see where we're at and what we're dealing with. So you can see here why the dollar stopped rallying and turned lower. Came into this rally-based drop, two levels on top of each other. And these are key levels with big profit zones. And, you know, we didn't even get to the top of the level. So there's room for the dollar to rally here, but there's equally room for the dollar to fall. This is not a high probability time to put on a position. We'd want to do that either on another kind of little rally in the dollar or let it come down to here. Okay, so make sure you keep this chart in your mind when you're either active trading today or putting on longer term positions. Sure, let's go over to gold. There's some old levels in this chart. Okay, if we look at gold, there's been room for gold to rally. I don't know why this line's here. But notice the way that it's rallied. That's why I want to bring into the 60-minute chart. I look at gold quite a bit. Right? Nice demand zones just below current price. And if we put a horizontal line, remember we put the horizontal line here, not because we think there's supply up here, but because we need a reference point. So, okay. So there we go. So that's what we've kind of run into. If we go down a time frame, you're going to see there's a nice base coming out of this rally base drop. So this level comes in, and we want to take more than that. Around 1298. We're sitting around 1292 right now. So we would combine these two levels right here. So that's 80 to about 84, and that's fine. That's 4 points, so it's about $400 of risk per contract. A little bit more, actually, I'm sorry, for the stop. Yeah, so gold, again, let me just get this horizontal line in here. When we scroll back, it is into some supply right now, but it's through this. Well, it's barely through this. This is not really what's holding it down. It's this. See that? Okay. And then so it's taken a lot of buying to get to the point it's at now, which means if and when it hits this level up here, likely to turn lower. But yeah, no, I agree. It could certainly turn lower from here. It's reached the top of this thing here, and that's a pretty good level. There are a couple pullbacks to it, but it still looks like a really good level. It would really score out very well with our odds enhancers. Let's take a quick look back. I'm always double checking and triple checking everything. Okay, there you go. So yeah, you had two levels on top of each other. Gold's hitting this now, likely to drop. But let's see. I want to see one more thing though. Let's do this. Let's see if we can actually just even enter this thing right now. All right. Let's see where it is in the hold. All right. So you can see what it's done in here. I wouldn't enter this now. It's chewed up so much of this supply. We also now, you see we have a demand zone right here. So there's really not a whole lot of room for this to fall. Now, as a short-term trader of gold, here's some opportunity. Possibly. If you're day trading gold, I don't know if you're day trading gold. A lot of people do. So here's this. which you're very likely to see a bounce off of. Again, this is a rally-based rally. They're found in the middle of moves. They're fine in the appropriate places, but just be careful with them. Okay. If price drops a little bit more, you will be left with a supply zone right up here. So there's room for price to trade between these two levels. For some people, that's enough. That's what they're looking for. I'm going to put this in, not because we have a level yet, we don't, but you're probably a point away from having that level. And that would open up an opportunity to sell short up here for a move down to here. The other thing we do in our programs at Online Trading Academy that I've been pushing with the teams a little bit is how to properly enter a breakout trade, how to properly do it, how to get in before price moves instead of just waiting for the pullback. A little too much to talk about in our session now, but we can do that also. Okay. So there's profit zone between these two. Risk looks small. Probability looks decent. So if you're day trading gold, just watch for this opportunity. And let me get back to a 60. Any other markets you want me to look at? If not, I certainly have my list. Oh, I think the pound was another one, correct? So as we go to the pound, don't forget about the dollar. Keep the dollar in mind. So the pound has been quite a mover for us. Whoops, that's not the chart I wanted. Oh no, it's this one. Actually, let me start with the futures. Same opportunity, but we've been trading the pound futures. And then I'll come back. You'll see the levels, and they're the same levels on the spot. So this is what we've been trading in the pound. Okay. What I want to point out to you here is there's still plenty of room in these larger time frames down to this level right here. You're going to have a little area right here, but nothing significant. Probably not a lot of demand there because of what's to the left, but down in here. So I wanted to just give you a reference point of where the pound is in the larger time frame, right, when it comes to larger time frame supply and demand. Now, having looked at that, let's go back to spot pound because I think that's what you're looking for. Okay, so here's that same chart. Here's that same demand zone down here. Here's that supply zone up here. Now let's go down a few time frames. Actually, let's go to this one. I'm not sure why these lines are on the chart. Yeah, these are all. Oh, that's from the supply right here. Okay. That one worked great, but we don't need it anymore, right? So knowing that there's room to the downside, and even when we come down to this 4-hour chart, we still don't have, anything significant until down in here. These two levels. Not that, because you're already at a pullback. Not that, because you've already been there. And not that because of the wick to the downside. All of those would be disqualified. These would not, if we just stick to our pure rules. So knowing that, we can focus on this one. Of course, the rally-based drop above is the ideal level. This up here. But this, given the big profit zone below, you don't have to be that picky about your supply zones that you're going to short against. Does that make sense? Again, when you have big profit zones, well, I think you get the point. Okay. Um, and here, the profit zone for this one, let me just make it a blue line. Yeah, so if there's the demand, let's go before that. Um, there's probably nothing left here, but it's so close to our demand zone below, let's just go a little bit above that. Okay. And the way that we make it very mechanical is if demand is right here, I will just take 80% of that, this line to that line. So let's just say it's the blue line, right, without measuring. Then we have to go in the trouble of measuring. But we can use one of our tools up here to measure. And that's how you make it mechanical. You always want to go for less than the available profit zone. Okay? You want entries that are not too tight. And your best levels, it's best to get in a teeny bit before the level. Healthy stops and very attainable targets. That's the key. That's what you want to be looking for. Wrap that around a 100% focus on supply and demand, and that's what you want to be doing. Okay, that's the goal. Now, once you have that consistency, you can then, if you want to make more money, then just increase position size. Does that make sense? And we plan this out again, knowing where we are in the bigger time frame and where price is likely to go. Yeah, oil is definitely on the list for today. Here's oil. So oil obviously had a big move down yesterday and continues to stay near the lows today. When we come to this time frame, actually, let's just go a little bit. Oh, this is oil. So yesterday, this was our level up. This was our supply demand grid level up 50.10 to 50.30. So today we need a new area. And for that, we can. I want to blow up the 60-minute for a second, just so you can see the downside room. Okay. We have a little level here that should come into play, but ultimately price should end up down in this area. Having said all that, now let's go to smaller time frames and see where our next level is to sell short against, to bet on that downside move while managing the risk. And that's going to be right here. Again, if we start with current price, go up the price ladder, you do have two levels right here, but we've built up some demand here. So I would not be surprised at all if prices hit these levels and turn lower, but we need a bigger profit zone. At least I do, to be on the safe side. Now, that would be the level, but we haven't talked really about stops. So I will always get my stop over that pivot high. That's a pretty big thing. So this looks like a really big level, but when you look at the profit zone below, your risk reward is still pretty ideal. And we're down to a 10-minute chart, so it's really not that much of a stop. You're probably talking about a 30-cent stop there at most. Okay? Again, we'd be playing for more downside room in oil. Sure, we can look at pound yen. So if we look at this daily chart here for a minute, let's always start with the larger time frames and work our way down. We look at the daily chart. We don't really have a lot of evidence of demand. We do have a little evidence of supply, not too far above. But we just want to spend, again, 5-10 seconds seeing where we're at on the larger time frame. That's it. So now we come down to the 60-minute chart. You have a lot of supply sitting just above. I mean, this whole area is like 2 or 3 supply zones on top of each other. And if you see how, again, we talked about this a minute ago, look how all this stuff stopped this rally here. Okay, now you're back up into that area with fewer buyers because you had a lot of buying going on right here, and it took a lot of buying to keep price up here. Now you're up here with fewer buyers, right? Because a lot of people bought in this. So now if price gets up to the level we just put in, that's an even higher price than where we're at now, showing that you have even less buyers. Does that make sense? And we're leaning to the downside here to supply, again, because of what we just saw, that big profit zone in a larger time frame, by looking at like the daily chart. Right? Does that make sense? Okay. Let's move on. Any other markets, or if not, I can continue to go through my list. We can look at a couple more. Yeah, Euro Aussie, no problem. One of the few green markets today. All right. So again, let's start with the larger time frame. There we are. We see we're just coming out of this. We're back up into these areas again, but this time instead of falling, we're basing just below. Probably have a little supply right here, but just again, so we know where we're at in the bigger picture. We come down to the 4-hour, we see this area of supply. We've been here before, and it doesn't score out high with our odds enhancer scoring system. Now we're down to this. This is a 10-minute chart. Make it a little bit bigger. There we go. So if price continues to fall, you have a couple areas on top of each other here. Especially this area here is ideal. This comes in about 149.08. Okay. But now let's go down to a small time frame right here. A little bit smaller because I think there's a little opportunity here. Let's see. We turn lower at this supply. You have 2 supply zones on top of each other. Again, price is likely to fall. This is that same area right here. Right? Isn't this? Yeah. No, this is actually a little higher. So watch this thing right here, but this is nice. You want this. This is the area we looked at on the larger time frame. But sitting just above it is a very ideal level. Okay. 149.20. So watch that. And you have a nice profit zone. You'd want to try to take that back to the highs. So you've got the 149.20, the level just below. And again, the goal would be to take that back up to near the highs. Make sense? And again, all this stuff, we keep the dollar in mind. That's helping us with direction. We start with the larger time frames, work our way down. It's no different than a doctor looking at multiple, x-rays, multiple pictures of the same exact, area of the body, right? To get different viewpoints to make sure they're properly assessing, what's in front of them. Okay? Let's come down here and look at the bonds and continue to rally. Okay. All right. Yeah, we can look at the euro. Yeah, we've got a nice position going in the euro. But let me take you to the futures first to show you that. Chart's a little froze here for a second. Okay, so here's that level that we've been trading off in the euro. I think we found that at FX Street. So price has been falling. We hit all this. I don't know if this is the position you're talking about, but if the question is kind of where does the euro go from here, let's go down to smaller time frames and take a look at that. Notice it got hung up here with this demand. See this on the, we can see it nicely on the 60 or the 30. Okay, but in the bigger picture, there is room to the downside. Just so we could get a little bigger picture here. There we go. So when you look down at below this pivot low here, you really don't have anything until you're going to have something down here around the 116 mark. But that's much lower from where prices are at now. And as you come down to smaller time frames, again, you're going to see you have supply zones above. And when you look below, nothing really changes. There's really no demand, and I'm already down to a 15-minute chart until you get to 116. So you could get little pops, sure. You're in an area now where you don't have, a lot of key supply or demand levels. So that's where, you're going to get price can move up, price can move down. That's fine. But as long as your entry is up there, from that area on the daily chart, that works. In other words, you have all the wiggle room you need. So if you're in that position, I would just stick with it and stick to plan. If not, there's that supply zone above and then the demand zone quite a bit lower. Ultimately, here's the weekly chart of the euro. So not suggesting it's going to come down to 115 overnight, but there is room for it to get there. And here we'd expect a turn higher. And at this point, that's where the dollar would be into that. There's a supply zone above that would likely take the dollar down below 92. Okay. So I'm a big fan of these putting on positions and leaving them alone. Certainly putting on positions with a complete plan. I didn't mean just put a position on and just leave it, but put it on and according to plan and leave it. Set it and forget it. Okay. All right. Well, if you have any questions, I'll put my email address in here. Seiden@tradingacademy.com. Happy to help if I can. All right. If you're having any challenge with your trading or financial goals, hopefully you're not. But if you are, then just let me know. We'll figure it out. Okay. So with that, have a great trading day, everybody, and we will see you next time.